Good morning, everyone. Friday's disappointing non-farm payrolls figure has sent the dollar down almost across the board. This morning it's opening lower, considerably lower in some cases, against all the G10 currencies here in Europe, except for the Canadian dollar, which I'll discuss in a moment. The payroll figure was particularly surprising because the ADP report on Wednesday had exceeded expectations. That caused some people to revise up their expectations for payrolls and caused a lot of people to start buying the dollar ahead of the figure. The result was amazing volatility when it came out, which highlights the risk of trading these numbers. If you like volatility, fine, but it works both ways. Now, the FOMC has said that its decision on whether to continue to reduce its bond purchases every month depends on the data supporting their, quote, expectation of improvement in labor market conditions, unquote. So, the question is whether this news means labor market conditions are no longer improving. Now, St. Louis Fed President Bullard implied on Friday that the answer to that question was no, and that he wouldn't change his views on just one data point. Mr. Bullard's comments agree with the view of Wall Street Journal Fed reporter John Hilsenrath, who was thought to be close to the thinking of the FOMC. His article following the payrolls report said the Fed probably won't alter its view. One thing that could alter the Fed's thinking, though, is a substantial decline in inflation. Even Mr. Bullard made that point in his comments. So, we have to watch both the employment data and the inflation data carefully. Thursday's U.S. CPI figure takes on new importance in the light of the disappointing payrolls. If U.S. inflation rises slightly, as it's expected to do, then tapering expectations may recover. My view is that the Fed will taper further at the next FOMC meeting, which is on January 28th and 29th, and I think the dollar should get some support from that. By the way, looking at the last 6 times the non-farm payrolls figure disappointed the market, there seems to be no sure pattern in how quickly the dollar recovers. Take a look at the graph that we have on our website in the daily comment. Now, as I said, the dollar fell against most currencies. The Canadian dollar was the outlier, though. That fell after Canada's employment report on Friday was even worse than the U.S. employment report. My favorite sterling Canada trade is going well, and I see no reason to change course at the moment. We've had a relatively empty calendar today. Only Italy's industrial production for November is the only figure that's out. The focus really will be on the speech later today by Atlanta Fed President Dennis Lockhart. He's going to speak on the U.S. economic outlook. It'll be interesting to hear whether he agrees with Mr. Bullard that Friday's payroll figure hasn't changed his view. If he does, then the dollar could start recovering even earlier than I expect. See, one person is just a data point, but with 2 points, you can draw a line. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.